What's going on, folks? Welcome to the Trade Well podcast, brought to you by Trade Well Management. I am your host, Donovan Marquez, the podcast where we discuss everything trading these financial markets, as well as acting as a personal trading journey and road to profitability. Thank you for tuning in, and I hope you enjoy the show. What's going on, everyone? Welcome back to the Trade Well podcast. Today, we are talking about one of the simplest and most useful indicators for beginners, and that is moving averages. In this episode, we'll cover what moving averages are, how to use them to spot trends, and which time frame works best for day trading. So let's get right into it. A moving average takes the price over a set period and smooths it out. That's basically it. This helps you see the overall direction of an asset and avoid getting caught up in small price movements. Big problem that people have that I see as well is the patience with moving averages. And you'll see this, guys. If you're listening to this while you're on the charts, plot a moving average on your chart, see what price does. Sometimes it's above it, it's beautiful. Sometimes it's below it and it's beautiful. And sometimes it's playing the moving average like a guitar string. Okay, so there are different ways and different times to use moving average. Now let's talk about one. So moving averages can help you spot trends. For example, when the price, like I said, is above a moving average, it's usually an uptrend. And when it's below, it's likely going to be a downtrend. Pretty simple and straightforward. As I mentioned in the last episode, the 50-day and the 200-day moving averages are super common for spotting long-term trends, but for day trading, if you are on the smaller time frames, you might use something shorter, like the 9-day or 20-day moving average. Now, you might hear different terminology, like 9-day, 20-day, or 9-period, 20-period, all interchangeable, same thing. Okay. Now, a quick little strategy that is super beginner friendly and can teach you things like patience and how to spot a setup if you're super new at this is moving average crossovers. Okay. A popular strategy is to watch the moving average crossovers. For example, if a shorter moving average crosses above a longer one, it's a buy signal. If it crosses below, it's a sell signal. Now, I've heard different terminology for this, like golden cross or death cross, something like that. You might hear that depending on where you get your information, but interchangeable. I would say that is a good strategy for someone who's barely starting out and needs to learn how to, number one, be patient, and two, spot a setup. Okay, so you cannot do nothing until you see the moving average cross. Then you look for your optimal entry. Okay, go ahead and practice that one if you're completely brand new. Now, if you're seasoned and you got a strategy, you know this is, you may still be using this method, you may not, I don't know, but that is one of the most popular and beginner-friendly ways to use moving averages. Okay? But as always, that is it for today's episode on moving averages. In the next episode, we'll talk about support and resistance levels and how they can help you time your entries and exits, guys. Now, as always, if you enjoyed today's episode, don't forget to subscribe and review this anywhere that the podcast is hosted. And share it with anyone who may be thinking about day trading, or yourself. If you're thinking about day trading, just share it with some friends. You know, the more you share it, the more you comment, the further that this podcast can go. Okay. But as always, guys, thank you for listening, and stay sharp, stay steady, and trade well. We'll see you guys on the next one.